spread is what your broker charges you. It is the difference between the two currency pairs. So if you're trying to buy the euro and sell the USD, it is the difference between the exchange rates. However much, if you were to take them, subtract them, you get whatever the spread is. That is what you would be paying your broker right off the top. Volatility is when the market conditions begin to change rapidly, and you see this a lot during high volatility. So high volatility means the market conditions change rapidly. You see big moves, major news releases are coming out. This is a trader's paradise. This is a time to catch big moves. You see larger candlesticks in this time. And then low volatility, the market is not changing very rapidly. It's much more slow and sluggish. No major news releases. This is a trader's worst nightmare, and this is usually the time that new traders try to force trades that don't actually that are not actually there. So this is the time when you see low volatility, stay out of the market. Liquidity is the amount of market participants that are actually in the market at any given time. So low liquidity means there's not very many market participants, or at least not very many participants putting in orders. High liquidity means there's lots of market participants putting in orders. You usually see a lot of market participants around major news releases. That's because there's a lot of people wanting to take advantage of what's occurring in the market. It is the worst time to trade when there is low liquidity. It is the best time to trade at high liquidity. So high news releases. Whether you look at the news or not, it's good to know at least when major events are going to occur so that you can set up and be ready for it. Volume is the size of the orders that are being put in by the market participants. So it really pertains to specific currencies. So if you are doing a high volume trade, that means you are purchasing a lot of a specific currency. So major market participants are doing major purchases in specific currencies. So some currency pairs are going to have higher volumes, and you'll see that depending on the session that you're trading in. I'll talk about that more as we go further. Low volume, not very many orders happening. You see this around holiday times, the end of the London session, the beginning of the Sydney session. Very low volume, not very many orders taking place. So now back to the Forex trading sessions. When is the best time to trade? Well, first, there are actually 4 main Forex trading sessions. Yes, there are smaller ones that are within each of these, but we're going to talk about the 4. So these are the 4 right here. Go ahead, take a look at it, screenshot it, take some notes on it. We'll talk about them each. Starting with the Sydney session, this is where the trading day officially begins in the Forex market. It is the smallest and most calmest of all of the markets. The major pairs that you will see in this one is the AUD, Australian, and the New Zealand dollar, NZD pairs. Those are going to be the ones that you see the initial movement. Those are going to be the ones that you start seeing more higher volume trades taking place because that particular economy is open. But it is a very slow market. You see the times listed on the screen. However, it could be different depending on where you are. So at the end of this slide, you will actually see, you'll have a way of going and finding out what time it opens for you. But right now, those are listed in Eastern time. This is not really the market to be looking for major moves. Not at all. This is the market that you should be kind of studying what happened in the New York session and getting ready to set up for the new trading session. Because like I said, this is where the session officially begins with Forex trading in the Sydney session. So the Sydney session is now followed by the Tokyo session. This is the second session in the Forex trading, in the world of Forex. It is the second one to open. It is the third largest Forex trading center in the world. Obviously, the yen is going to be the most traded currency during that time, and it is the third most currency traded in all of Forex. It sees about 6% of Forex transactions, so that means there's going to be a lot of high volume trades taking place with the yen pair. Also, it is part of the Asian session. Okay, let's get it out. The Asian session. You will usually see Sydney session, Tokyo, or you might just see Asian session. The Asian makes up both the Sydney and the Tokyo. This is also a very low liquid and low volume. You're going to see higher spreads in this one, same as you would see high spreads in the Sydney session. Why? Because there's not very many market participants out there trying to trade. So again, even though the Japanese market is open, overall, all around the world, not very many market participants are trading heavily on the yen pairs. So this is not a time to be looking for magnificent setups. Yes, you can get some nice trades out of the market, but it's not the time to be looking at magnificent setups, and you will be paying higher in the spreads. Now we have the biggest trading session of all of Forex, the London session. It is the third official session as in order of how they go, but it is the biggest, most largest session to trade in. The pairs that are going to be affected are the pound, the euro, and the Swiss franc. Also, this has historically been the center of trading. Europe has always been the center of trading. 34% of all Forex transactions take place here. So you're going to be seeing very high liquidity, high volume trades taking place, much lower spreads. Why? Because it's not going to be very hard for your broker to arrange a trade for you. You're going to see major news releases taking place during this time. All eyes are going to be on these pairs along with whatever they are, matched up with, such as the pound and the dollar, or the pound and the yen. So this is a time to be looking for magnificent trade setups. This is not a time to be planning out. You should have been planning all of that out during the Tokyo and the Sydney session. This is a time to be watching and waiting for your setups to be ready to go. Followed by the London session, we have the New York session, which is also the other biggest trading session of all of Forex. It is the fourth and final. It marks the end of the Forex trade.